Hi there, welcome back to Trading Options Network. Today in this video we're going to be discussing fundamental analysis. What is fundamental analysis? When do we use fundamental analysis? And what are some examples of fundamental analysis? Now I'll be honest with you, this video is going to be relatively short because I'm a swing trader, meaning the positions I hold are anywhere from a few minutes to a couple of weeks long. Therefore, fundamental analysis is not as important to me as it is for some people. Now, I'll talk more about that shortly, but first, let's go ahead and define what fundamental analysis actually is. So, fundamental analysis is the measurement of a company's economic and financial well-being compared to the current market, industry, and other economic conditions. Well, what does that mean? In layman's terms, we want to know if the company is growing and making money, and we're going to compare it to other companies in the same sector and industry, as well as how the overall economy is doing. Some of the variables used in fundamental analysis are as follows: profits, expenses, earnings, and debt. Now, there are many other variables used for fundamental analysis, but these are definitely some of the top four. Now, when do we use fundamental analysis? Well, it could definitely be used to screen for financially stable companies. It's also used for long-term trading. Now, a moment ago, I had mentioned that I do not do a lot of fundamental analysis, as it is not important to me as it could be for other traders and investors, and this is why. Fundamental analysis is used to create a well-balanced portfolio with company stocks and ETFs for the long term. Therefore, I focus more on technical analysis, which is exactly what's going to be discussed more in my next training. Now, what are some examples of fundamental analysis? Well, the earnings per share is one, or EPS for short, and that's a company's profit divided by the outstanding shares of the company's stock. So after the conclusion of each quarter, every company is going to record an earnings call delivering the data from the previous quarter. Now here's an example of the ABC Company. ABC Company recorded a profit of $20 million. The outstanding shares for the ABC Company is 16 million. So if we go ahead and divide $20 million by 16 million shares, we will get a quarter three earnings per share for the ABC Company of $1.25. Another example of fundamental analysis is the price to earnings ratio. And that's the ratio of a company's current share price relative to its earnings per share annually. A typical average is between 20 and 25, but it can vary from sector to sector and industry to industry. Now, if it's below, the company is said to be undervalued. If it's above the average, the company is said to be overvalued. Here's an example of the ABC Company. Let's say the stock price is $80. We can easily get the annual earnings per share by adding up the last 4 quarters. And for the ABC Company, we see the annual earnings per share is $4. If we take the $80 divided by the $4, we get a P/E ratio of 20. If this company is in a sector whose average is 15, we can still actually say that this company is overvalued. Simultaneously, if the sector or industry average is more around 30, we can easily say that the company is undervalued. Again, the P/E ratio, when compared to its sector and industry, is going to give you an idea of whether or not the company is undervalued or overvalued. Now, the P/E to growth or PEG ratio is another common practice of fundamental analysis. And this is the ratio of the company's P/E ratio to the company's annual earnings per share growth. If it is above 1, the company is said to be overvalued. If it's between 0 and 1, the company is said to be undervalued. If it's below 0, that's a pretty big red flag. Either the company is losing money or the growth is declining. Here's an example of the ABC Company. Let's say it has a P/E ratio, which we just discovered previously, that is 20. The annual growth is 22%. If we divide 20 by 22, we get a PEG ratio of 0.91. This means that the company is slightly undervalued. Now, what do I mean when I say a company is overvalued or undervalued, since I've been throwing these terms out to you in these last few slides? Well, if a company is overvalued, that simply means that the stock price may be higher or possibly had a run up and could be declining in the near future. Simultaneously, if a company is undervalued, it could be signaling that the stock could actually grow in price in the near future. I did say this video was going to be relatively short, but let's go ahead and do a little bit of a review. Fundamental analysis is the measurement of a company's economic and financial well-being compared to the current market, industry, and other economic conditions. We use fundamental analysis to screen for financially stable companies, long-term trading, or building a portfolio, amongst many other things. Some examples of fundamental analysis include the earnings per share, the P/E ratio, and the PEG ratio. I really hope that this, albeit short video, did help you understand a little bit more about fundamental analysis and when to use it. If you do decide that you want to be more of a day trader or swing trader, you're probably not going to be using a lot of fundamental analysis. But if you are more of a long-term trader, this is something that you're definitely going to want to study a lot more on. That being said, I really do want to thank you for watching and tuning in to Trading Options Network. If you haven't already subscribed, click subscribe now. And you can also find us on Facebook, TikTok, and Instagram for daily updates and tips. Again, I do appreciate you guys watching, and I really hope you guys have a great rest of your day. God bless.